my friends, from the ringing of the truly iconic, the one, the only closing bell right here at the New York Stock Exchange. We've got the team from S&P Global. Yeah, that S&P. They are here to do the show, to do the bell, rather. Taking a look at a few of the top sectors in the S&P 500 that did have a strong day here on Wall Street today. Energy boost. We'll get to energy stocks later on in the broadcast, cyclicals and utilities. The laggards out of the S&P 500 sectors we track most closely include technology, materials, and real estate. As for those Dow 30 components, the leaders include UNH, Chevron, and Disney, bouncing off that support level of 111 for positive territory today. Laggards, Amgen, IBM, and Goldman Sachs. And with that, my friends, it is about that time, our favorite tradition here at the NYSE, S&P Global doing the honors for the closing bell. Yeah, there's the three gavels, Bobby, we've been waiting for. That officially brings about a close to a very eventful day here on Wall Street. Taking a look at the tail of the tape, as expected, the scorecard here on Wall Street. Good bit of profit taking, a little bit of a sell-off here on Wall Street. Nothing too urgent. The S&P 500 finishing down about 0.3%. The Dow 30 components down 0.37. The New York Stock Exchange Composite down 0.3. And the small caps, unfortunately, bearing the brunt of the worst of today's negative rotation. Russell 2000 down 0.9%. Let's bring in our kickoff guest of the broadcast. Amy Friedrich is President of Benefits and Protection at Principal Financial Group. She kicks us off right here at the New York Stock Exchange. Amy, welcome to the show. Great to have you.
Thanks so much for having me.
Let's talk about tariff pressure specifically that you're seeing, not just on all businesses, small businesses especially. We know they are the backbone of the economy. How much are they feeling the weight of ongoing tariff and trade-related uncertainty?
They are feeling the weight. So when we survey small businesses, 58% of them, nearly 60% of them are saying that tariffs are one of their top concerns. So they're worried about it, but what I would say is they're not quite ready to pass that on to their customers yet. So one of the things we do is we talk to large businesses and we talk to smaller businesses. Larger businesses are saying we're passing on some of those price increases from tariffs to about 2/3 of them, but only about half of the small businesses are passing it on. So they're worried, but they're staying confident in their own business strategy. So I like that about small businesses.
What questions are you asking them in those surveys in terms of respondents, and what other additional information, necessary context about the health of their own businesses are they telling you in real time?
So we're asking them questions about what are they worried about? How's their cash flow? Do they feel like they can capitalize the things they need to capitalize? They like the fact that they thought there was an interest rate cut coming, and it came. They planned on that. They're also saying we're worried about healthcare costs. We're worried about the generalized U.S. economy. What they're not really worried about is they actually think their business strategy is right. They like their businesses, they like their potential for growth, but they want more certainty. So they're looking at the long game and saying, I can make a contribution to this economy like the U.S. economy needs us to if you give me more certainty. So that's what we're hearing from the survey, is they're worried about a few things, confident in themselves, and they want more certainty in trade policy.
Amy knows as well as I do, a lot of small and medium-sized businesses. Experts say they could be prime acquisition targets. We're in a new regulatory regime where maybe M&A activity could pick up to the benefit, perhaps, of a lot of these companies. Do they feel bullish about where the M&A space is?
Yeah, they feel okay about the M&A space. Here's what I'd say. A lot of business owners think they've got the answer. They think they've done something that really is differentiating, that they like what's happening in their local market. So I see more interest in them taking on partnerships than necessarily full-on acquisition. So they like partnerships, they like sharing risk, they probably like a little less giving up their whole identity and their future growth pattern.
Yeah, absolutely. What is one reality about where you think the state of the average American small business is today that you would want more people to understand?
The reality is they're confident in their own growth. They need more trade certainty. They need more U.S. economy certainty. So even if the news is going to be bad, they want to be able to plan for what that news is. So planning is critical for them.
Yeah, forward-looking guidance is so important for a company of any size.
They need it.
We are in this environment where, as you said, We got that little bit of an interest rate cut not long ago. We have expectations for more in October, as well as a December meeting. What is their best sense for the year ahead, not just Q4 of 2025, but everything that 2026 could bring for small businesses too?
So the year ahead, they're actually kind of looking forward to it. Business owners are a little bit more like game on. Now, that is business owners in certain industry segments. If you're running a retail shop where you need that traffic to come in, you need consumers of certain types to continue spending, you're probably a little bit more nervous about what's happening. If you're running something that's a little bit more high tech, you're running something that is maybe a little bit more focused on knowledge workers, you're feeling like you're seeing some gains and you just want the certainty to make investments to begin to grow again.
Yeah, you are a terrific guest to kick off the broadcast. I hope you'll continue to revisit us because
Thanks.
taking a look at those small businesses is so crucial to the health, the ongoing nature, and success of the financial markets. Very grateful for you being here today. Thank you so much.
Thanks for having me. It's
awesome.
been great.
Jeremy will take your mic. Bobby, you and I are going to go for a walk. We're going to talk about one of my favorite semiconductor ETFs, the EcoWeight XSD. Bobby, it's right here in the bottom right of the screen. You see that number there at 319. It actually came off its all-time high in yesterday's session of 325. Still seeing that really strong uptrend for the broader semiconductor space. This number here at 319, well north of both its 50 and its 200-day moving averages, and that ETF is up more than 100% off of its April 7th lows. Bobby, let's keep the party cooking. Well, now we'll take a look at not one, but two notable New York Stock Exchange listed companies on the day. One is really emblematic, I would argue, of the ongoing boost that we've seen in energy stocks. So we're going to start with ticker symbol XOM. Bobby, it is right here above my screen. Part of that energy boost shares today up about 0.5% for ExxonMobil. Tight supply concerns out of Russia, export-related issues out of Venezuela, off its all-time highs of last October, by about 8 to 9%. Bobby, finally, we'll quickly look at shares here at Alibaba, up more than 8% of the day. That is not a typo, reaching its fresh 52-week high. Alibaba Cloud launching a new suite of AI-related tools, part of a mega rally year-to-date for Alibaba of more than 109%. Yesterday, Money 2020's very own Scarlett Sieber, she is, of course, the Chief Strategy Officer. She sat down with Affirm CEO Max Levchin. You do not want to miss this interview. We got it for you now. Take a look.
I am here with Max Levchin, founder and CEO of Affirm. This show is all about markets and tech. Let's start with Affirm's earnings. Welcome to the show, Max. So happy to have you here.
Thank you for having me.
So taking stock is all about markets and tech. Let's start with Affirm's earning. We're seeing numbers all over the floor here live at the New York Stock Exchange. Affirm had a great quarter. Can you speak a little bit to your latest results? What do you think were the key drivers to that acceleration you saw this quarter?
Yeah, we had a great quarter, not the first one in a row, I might add. We accelerated our total GMV growth, grew revenue, grew the bottom line. We call it revenue less transaction costs. Probably most importantly for our shareholders, we announced exactly a year ago that we would hit GAAP profitability this quarter we just reported, and we did exactly that. And so firing on all pistons and just keep on pressing our advantage.
That's really exciting. As you mentioned, first quarter of operating income profitability. What, from your lens, being the founder and CEO of Affirm, what does this look like for Affirm? What's next?
Well, for one, we have committed to our shareholders that we will continue operating with this operating income as a positive number, as a baseline of how we're going to run the company, which is really important as we look to gain efficiency, to continue shipping things without increasing costs too much. So that's the important guardrail, if you will, but we also expect to continue growing really, really strongly. We have a whole host of new products we're excited to ship. So, in many ways, it's an important waypoint, but it's just a waypoint.
Love it. Products are at your DNA and at your core, so we're really excited to see what comes next from you. Of course, we saw your announcement last week that Affirm is now available for in-store purchases with Apple Pay. I know you've had a great partnership with Apple Pay there, so that's big news. Congratulations on that. Where do you see the in-store opportunity more broadly now with partnerships like Apple Pay?
It's really, really transformative. We already have been gaining really nice traction in store with the Affirm card, which we built specifically to help our consumers use Affirm right there at the point of sale, whether they're buying a large grocery purchase or a bicycle at the local bike shop. And so being able to do this with digital wallets, obviously Apple Pay is a hugely popular one, is just a really, really strong force multiplier. So we're very excited about this, very early, but only good things will come from this.
The idea of force multiplier definitely resonates here. So we've talked a little bit about announcements, so let's continue on the announcement track for a second. We have another announcement today to share with the show. Hot off the press, you are going to be headlining Money 2020 Vegas as our closing keynote on Sunday Night Live, which is our biggest night, and we are so excited to have you. You know, 10 years later, this is when you first came to the show, Max. How are you feeling about coming back 10 years later?
It's gonna be great. It's quite the homecoming. When we were barely knew anything, barely anyone knew who we were. You know, Affirm was not a household name, and a decade later, which feels like this happened yesterday, but sure it's been a long time. We're now enormous, the largest player, in my biased opinion, the best one, publicly traded, profitable. So this will be exciting.
Love it, love it. Well, thank you so much, Max Levchin, the founder and CEO of Affirm. It has been a true pleasure. Thank you for your time, and we will see you in Vegas in a few weeks.
See you soon.
Back over to you, JD. Thank you.
We're so back. Welcome to the broadcast. This is Taking Stock. Time now for a few fintech, crypto, and AI-related headlines for your Wednesday afternoon. First up, the price action for the crypto majors. Kind of a mixed territory. We saw Bitcoin rise about 1.3% in the session. Ethereum down fractionally on this trading Wednesday. Next up, we're talking crypto market maker GSR. The company has filed with the SEC to launch a digital asset treasury company's ETF. Ah, yes, yet another name in the space. This one aimed at giving investors exposure to firms holding crypto on their balance sheets. And finally at this hour, the CEO of Tether confirming plans for a major capital raise that could value the stablecoin issuer at $500 billion. That, of course, would put it on par with both OpenAI as well as SpaceX. All right, time now to bring you a great interview we did here at the NYSE yesterday, where I caught up with Coinbase Chief Security Officer Philip Martin. Take a look. Joining us today for a one-on-one interview from the trading floor of the New York Stock Exchange is Philip Martin. Philip is the CSO of Coinbase, and we are very grateful for his time today. Philip, thanks a lot for joining us. Good to have you.
Happy to be here.
What would you say is the single largest cyber threat that specifically faces the landscape of crypto exchanges today, Philip?
I think the single largest cyber threat facing exchanges is really the same as the single largest cyber threat facing every other business that operates online. It is hackers trying to subvert employees through phishing, through watering hole, through any number of attacks.
How would you say the company, Coinbase's security strategy has evolved? You're in a new ecosystem, a new landscape of higher trading volumes. The number of users you have on the platform has scaled. I'd have to imagine you have comparable security concerns that come along with that scaling.
Of course, scaling the program is a focus of us continually, sort of throughout the evolution of crypto and Coinbase. The reality is, JD, that crypto is such a volatile ecosystem in general that we face this challenge of scaling up, scaling down, right sizing security to the threat continuously. So this is a very well developed muscle for us.
I wonder what the partnership or maybe relationship with law enforcement at times has to look like in order to put a stop to bad actors in the crypto landscape. I think any financial services core product has its fair share of bad actors, and crypto is certainly not immune to that.
Not at all, and that's why it's so important that we partner very, very closely with law enforcement, both on the side of responding to law enforcement when they come to us with warrants, subpoenas, things like that, as well as on the side of working with them proactively, helping train them, helping them understand the landscape of cryptocurrency, what it's good for, what it's not good for, and how that can be worked into an overall investigation.
Philip, how do you go about striking the right balance between convenience for users on the one hand and much needed airtight security on the other?
I don't think that's necessarily a trade-off. I think you can have both. I think there are technologies out there. A great example is passkeys, where it is both convenient for the user and extremely secure when implemented properly. So we really look for those win-wins. But if we're forced to make that trade-off, we want to make sure that we educate that user, provide them a menu of options, because my threat model is not the same as your threat model, is not the same as anyone else's threat model. So we want to let consumers make informed choices as to their level of security versus inconvenience trade-off.
Philip, I wonder, are there lessons you think that traditional finance could learn from Coinbase's approach and how you're going about looking at cybersecurity?
Absolutely. I think security shouldn't be an area where we are competing. Security should be an area where we are cooperating, both among digital currency exchanges as well as among the larger sort of financial institution environment, which is exactly what we do. We're members of things like FSISAC. We started a crypto ISAC. So that we can work together and share those learnings in both directions.
Philip Martin, the CSO at Coinbase, thanks a lot for taking the time. Good to have you, Philip.
Good to be here. Thank you.
Welcome back to Taking Stock. We are still live down here from the trading floor of the New York Stock Exchange. Time now to bring you the latest in the worlds of startups, raises, and rounds. And we got news with 3 different AI startups at this hour. First up, Modular raising $250 million at a $1.6 billion valuation, positioning itself as a challenge directly to NVIDIA's dominance in AI computing. Next up, Emergent raising $23 million in Series A funding. That round led by Lightspeed, as the company builds a platform that allows users to create apps with simple prompts. And finally at this hour, SuperPanel raising $5.3 million. This in a seed round co-led by Outlander VC as well as Field Ventures, aiming to automate the legal intake process for law firms and clients. Time now to bring you an interview I did earlier this week, and I am so excited for this one because I sat down with award-winning chef and household name TV personality, the great Andrew Zimmern, right here at the New York Stock Exchange. Take a look. You do not want to miss this one. Join us here on the trading floor of the New York Stock Exchange for a one-on-one interview is food industry icon and advocate Andrew Zimmern, here to talk about his latest philanthropic work, the future of food service, and so much more. Andrew, very grateful for your time and the consideration to join us here. Thank you so much. Let's start first and foremost with an introduction to our viewers who might not know the full story about Giving Kitchen and the depth of your philanthropic efforts.
Well, it's fully, half of my time these days is spent on that kind of work. I think once you get a platform of a certain size, you're obligated to give back. I've been associated with the Giving Kitchen for just under a decade. They were founded 12 years ago when a chef was diagnosed with stage 4 cancer. Community rallied around him, helped them pay their bills, and out of that, his widow founded the Giving Kitchen. Giving Kitchen is established for one reason only, and that's to help food service workers in crisis. Just this last August, we gave away over $250,000. We've served 31,000 food service workers and growing over the years. We're in all 50 states, multilingual call center, stability network, financial aid in crisis. It could be someone breaking their leg, or it could be an environmental disaster like we saw in Asheville with the horrific storms earlier this year. So it's an incredible organization. James Beard, Humanitarian of the Year award winner. And with Food Service Worker Day coming up on September 25th, we've chosen this time to remind people that we need to recognize food service workers, the third largest group of employees in the United States. Third largest, it's a massive number and represents a huge piece of GDP, but this is an incredibly large group of very, very special people, and we need to say thank you to them for their contributions to our culture, right? This is where we celebrate everything, is the neighborhood restaurant, right?
I know you do a lot of work around the world, but I wonder geographically across the United States, do you find there are particular communities, cities, states where maybe the rules of the road, the regulations, the approach from the government is a bit more favorable to the average food service worker, or are you seeing comparable pressure regardless of where these men and women live?
Overall comparable, but you raise a really interesting point, right? It's easier for an operator to open up a restaurant in the Southeast, right? A lot of the rules and regs are a little more lax than they are, say, in my state of Minnesota, where operators have to jump through a lot more hoops to get a liquor license or an outdoor patio or a certificate of occupancy for a building, right? But then it sort of flips around, right? We have so many great safety nets in the state of Minnesota, and a lot of help is available to people, whereas in a lot of southern states, we don't. So it's a really interesting mix, and there is no one rule. You used a really interesting word, which is regulation. One of the things that I'm trying to do in the food rescue business, in an effort to feed the hungry in America, a number that also keeps growing, is to flatten out the regulations, because I'm on the advisory board of Spoonfuls, which is a Massachusetts-based food rescue organization that's doing incredible work, incredibly successful, replicatable model, but they can't move into other states around them because the regulations are different about how you pack, process, and feed people. That's wrong. This is one of the reasons that I've been calling for the last, 9 years for a Secretary of Food. Food is such a massive piece of our GDP, right? I mean, just insanely massive. Independent restaurants alone are about 6%. That's just independent restaurants. When you take all of hospitality, all of food, the ag, and yet we have so many disparate agencies, 7 or 8 alphabet agencies, all with a little piece of the food game. We need someone we need a Secretary of Food.
Welcome back. I'm Scarlett Sieber with Money 2020, and on this episode of Hindsight 2020, we're going really far back. Way back to 1869, September 24th. I'm not just wearing black because I love wearing black. It's Black Friday up in here. Not the type that you wake up, early that Friday morning and go get that flat screen. We're talking about the OG, the original Black Friday, the Wall Street Black Friday. The day two Wall Street schemers tried to hijack America's entire money supply. Meet Jay Gould, a ruthless robber baron who built a railroad and telegraph empire through market manipulation, backroom deals, and an uncanny ability to outsmart his rivals. And of course, you got his partner in crime, James Fisk, a flamboyant showman financier, part Wall Street schemer, and part Broadway man, whose scandals were as legendary as his stock manipulations. Together, they hatched a plan to corner the gold market. And yes, that is the most 1869 sentence there could be in existence. Corner that gold market and have a beer for breakfast because water cleanliness was not guaranteed. When I tell you guys, we're talking about 1869, the average life expectancy was around 40 years old. Can you believe that? No computers, no high-frequency trades, no Bloomberg terminals. If you wanted gold, you had to physically go to what they called the gold room on Wall Street, a trading pit where brokers shouted bids and waved slips of paper with the energy of an auctioneer on 15 cups of coffee. And I've had a few, so I can only imagine what that would feel like. Gold and Fisk quietly sent in agents, dozens of brokers working on their behalf to buy up as much gold as possible, driving up the price day after day after day. Why gold, you ask? Because at this point in the U.S., gold was this quasi-gold standard. Get the point, right? Paper greenbacks issued during the Civil War were still circulating, but gold was really the measure of value. By squeezing the gold supply, Gold and Fisk could make exports collapse, grain prices soar, and rake in massive profits as the economy as a whole bent to their will. And for a period of time, by the way, it did work. Gold spiked from about $130 to nearly $160 an ounce in just days. Farmers couldn't ship crops, business people froze, and the entire economy teetered on chaos. Also, two of the wealthiest could become even wealthier. Sense a pattern here? I don't know. But the president stepped in. On September 24th, the Treasury dumped $4 million in gold back in the market. Prices collapsed instantly. Gold managed to flip and slip out with some profit. Fisk laughed it off. Everyone else, they were wiped out, destroyed. Fortunes destroyed, banks reeling, farmers furious. Black Friday revealed just how fragile the financial system was. But unlike the 1929 crash, which eventually produced the SEC and modern security laws, Black Friday didn't really trigger an immediate regulation because the U.S. in 1869 didn't have a mature financial regulatory framework.
Welcome back to the broadcast. Before we wrap things up, I want to give a huge special shout out to Shelly Kayat-Weston. She is the president of basketball operations at the one and only Charlotte Hornets. She visited us down here at the New York Stock Exchange today, hooked me up with my favorite new threads. Shout out to the Hornets and best of luck on the upcoming season. Tomorrow here on Wall Street, 8:30 a.m., initial jobless claims. We'll get the Q2 GDP third revision reading. Plenty of Fed speak. 9 a.m. tomorrow, NYSE TV Live and FinTech TV Live, both down here from the trading floor of the New York Stock Exchange. Kristen and Remy, respectively, will be counting you down to the open. And that's going to do it. This is Taking Stock. I'm your host today, JD Durkin, and we'll be back tomorrow with a whole new show from the NYSE.